Hey everyone, here are the latest cryptocurrency updates for April 2025, based on recent reports and posts on X. So, let's talk about market trends. The crypto market has seen some volatility due to US trade tariffs in the first quarter of 2025, causing a short-term decline in Bitcoin prices. However, Bitcoin actually stabilized in the second quarter, trading around $87,514 as of April 22, 2025, with a 17,403% growth since May 2016. The total crypto market cap is approximately $2.75 trillion, which is down about 6% recently due to global market reactions to those US tariffs. Bitcoin is projected to trade between $80,440 and $151,200 in 2025, with a stretch target of $185,000, driven by institutional adoption and ETF approvals. Now, moving on to some key cryptocurrency updates, starting with Bitcoin. Bitcoin crossed $87,000 on April 20, 2025, amid economic uncertainty from Trump's Federal Reserve policies. Some traders are actually viewing it as a safe haven asset right now. Strategy, a firm, bought 6,556 BTC for $555 million, raising its holdings to 538,200 BTC. Meanwhile, China is reportedly selling 194,000 seized BTC, making it the second largest holder after the US. Alright, next up is Ethereum. Ethereum's price is sitting around $1,579, which is up 14,259% since April 2016. It's expected to trade between $1,666 and $4,910 in 2025, with a stretch target of $5,590. ARK Invest added staked Solana exposure to ETFs, but not Ethereum directly. Galaxy Digital swapped $106 million in ETH for other assets, signaling some portfolio adjustments. XRP is trading at $2.09, which is up an incredible 34,658% since 2017. Forecasts suggest XRP could range from $1.81 to $4.44 in 2025, with a stretch target of $5.25. Coinbase has listed XRP futures contracts, and that's really boosting institutional interest. Also, Ripple's RLUSD stablecoin is now swappable on Curve Finance, which is enhancing DeFi liquidity. Solana, or SOL, is currently trading at $136.68, up 17,651% since 2020. Looking ahead, forecasts put Solana's range between $122 and $490 in 2025. Recently, Coinbase debuted a Solana token recovery tool, and Pump.Fund moved 1.8 million SOL, sparking quite a bit of discussion about liquidity. Meme coins are making waves again. Fartcoin has overtaken Bonk in market cap, so it's now emerging as a meme coin leader. Dogecoin still remains super popular, and Doge Day is celebrated every April 20th. Its price is ranging from 16.6 cents to 77 cents, with a stretch target of $1.14. Shiba Inu, or SHIB, is projected to trade between 0.0000133 and 0.0000666, and Husky Inu has entered pre-launch with a lot of buzz around its price rally. So let's talk about some of the latest projects making waves in crypto. First up, there's BMEX, which is actually a Solana-based meme token focused on health purposes. It's aiming to be a kind of decentralized doctor using health AI, and it just launched on the Launch My NFT marketplace. Then there's Kubetics, ticker symbol TIX, which is all about decentralized VPNs to boost privacy and security. And, not to be overlooked, BlockDAG has raised $215 million in its presale and seen a 2,380% price increase. Their goal? To support over 1,000 decentralized apps by 2026. Pretty ambitious, right? Moving on to some big regulatory and institutional developments. Pro-crypto Paul Atkins has been sworn in as SEC chairman, which is fueling a lot of optimism for clearer regulations in the industry. The SEC has also dropped those high-profile cases against Ripple, Coinbase, and Kraken, signaling a real shift away from what folks called regulation by enforcement. Over in Nigeria, the Investment and Securities Act of 2025 now recognizes cryptocurrencies as securities, bringing them under SEC oversight. Interestingly, Nigeria ranks second globally in crypto adoption. Meanwhile, Coinbase and Circle are exploring banking charters, especially with all the new US stablecoin rules. And former President Trump's pro-crypto stance, including a new task force and a so-called crypto czar, is encouraging innovation, even though tariffs are creating a bit of a risk-off sentiment. Now let's look at some broader industry trends. AI tokens and decentralized AI, or DAI, are definitely gaining traction, especially as they integrate blockchain for secure and transparent AI applications in sectors like healthcare and finance. Stablecoins such as Tether or USDT and USD Coin or USDC are playing a vital role in remittances and cross-border trade, with Circle even launching a global payment network. On the sustainability front, Bitcoin's energy use is projected to reach 70% renewable by 2030, which is a big step in addressing those environmental concerns. And finally, Bithum is planning an IPO and some major restructuring by 2025. So, Binance CEO Richard Tang is actually predicting a new all-time high for the crypto market in 2025, and he thinks it'll be driven by US regulatory clarity under Trump. Around 60% of US adults who are familiar with crypto believe values will rise during Trump's term, and get this, about 28% of all US adults, that's roughly 65 million people, own some form of crypto. Analysts are forecasting that Bitcoin could hit somewhere between $150,000 and $185,000, and altcoins like ETH, XRP, and SOL are also in a mid-cycle upward trend. Now you're probably wondering about possible events in 2025 that could negatively impact the crypto market, especially considering the recent terrorist attack in Pahalgam, Jammu and Kashmir, and how those kinds of events might ripple into the crypto space. So I'll walk you through an analysis by connecting the dots between geopolitical, economic, regulatory, and market-specific factors that could lead to a downturn, keeping the discussion grounded in the broader context of the attack and its implications. Let's go ahead and outline some key events or scenarios that could adversely affect the crypto market in 2025, with detailed explanations. Okay, let's talk about the escalation of geopolitical tensions in South Asia. Here's the context. The Pahalgam terrorist attack on April 22, 2025, which killed at least 26 people, including tourists, has really heightened tensions in Jammu and Kashmir. The attack, which has been attributed to the Resistance Front, or TRF, with alleged backing from Pakistan, happened at a time when Pakistan's army chief, Asim Munir, was making some pretty provocative statements. This could easily escalate into broader regional instability, especially since India's Prime Minister, Narendra Modi, actually cut short his Saudi Arabia visit to address the crisis. So, what's the potential impact on crypto? First, there's this risk-off sentiment, geopolitical unrest, especially in a strategically sensitive region like Jammu and Kashmir, usually triggers a risk-off mood in global financial markets. Investors might pull out of volatile assets like cryptocurrencies and move towards safe haven assets. Think gold, US Treasuries, or the US dollar. In fact, posts on X have pointed out that political uncertainty can lead to short-term volatility in Bitcoin and Ethereum prices because of broader macro implications. Second, there's regional economic disruption. The attack could disrupt tourism and trade in India, and India is a pretty significant crypto-adopting nation. The crypto market there is growing, with platforms like Bayou Coin reporting increased institutional interest. If economic activity or investor confidence in India drops, crypto trading volumes and adoption could take a hit. Third, sanctions and cross-border tensions. If India imposes sanctions or retaliatory measures against Pakistan, or if global powers get involved, cross-border financial flows, including crypto remittances, could come under scrutiny. Stablecoins, which are critical for remittances, like US-Mexico transfers, which are projected to grow 5 times in 2025, could see reduced usage in the region due to heightened regulatory oversight. So, what's the likelihood and what are the details? The upcoming Amarnath Yatra, which actually has its base camp in Pahalgam, is a potential target for further attacks which could really amplify instability. Former J&K DGP SP Vade has highlighted the attack's timing as a concern for the Yatra. If things escalate, it could even lead to military standoffs like we've seen in past India-Pakistan conflicts. Remember the 2019 Pulwama attack? That kind of escalation would likely cause a sharp sell-off in risk assets, including Bitcoin, which actually dropped 17% in a week during a 2024 market downturn. And crypto markets are highly sensitive to news. Posts on X suggest that markets react really strongly to geopolitical developments, especially US-China trade tensions, which could be pretty similar to what we're seeing with India and Pakistan. Now let's look at the global economic fallout from US trade tariffs. Here's the context. The Trump administration's reintroduction of aggressive tariffs in the first quarter of 2025, for example, 15% on US coal and LNG and 10% on crude oil, has already caused a lot of volatility in global markets, including a $2.2 billion crypto liquidation event in February 2025. These tariffs, combined with the global attention on the Pahalgam attack, could make economic uncertainty even worse. So, what's the potential impact on crypto? First, there's market volatility. These tariffs have already led to a short-term decline in Bitcoin prices in the first quarter of 2025, with the crypto market cap dropping 6% to $2.75 trillion. If there are more tariff hikes or retaliatory measures from countries like China, Canada, or Mexico, this trend could deepen, as we saw in a $1.35 billion liquidation event that really hit XRP and Solana. Second, reduced investor confidence. High tariffs increase inflation and borrowing costs, which makes speculative assets like crypto less attractive. The Federal Reserve's decision to scale back interest rate cuts in 2025 has already weighed on Bitcoin prices, since higher Treasury yields draw capital away from riskier assets. Third, supply chain disruptions. Tariffs can disrupt global supply chains, and that affects tech-heavy crypto sectors like mining hardware. Think GPUs and ASICs. This could raise costs for miners, reduce profitability, and potentially lower Bitcoin's hash rate, which actually hit 1,000 exahashes per second in 2025. As for likelihood and details, posts on X are predicting that central banks, either in the US or China, might intervene with quantitative easing within weeks to stabilize markets, which could signal a bottom for crypto. But if QE is delayed, then prolonged tariff-driven uncertainty could keep crypto prices suppressed. Also, the timing of the Pahalgam attack, which coincided with Modi's Saudi visit and US Vice President J.D. Vance's trip to India, could really amplify global trade tensions if diplomatic relations sour, and that could indirectly affect crypto sentiment as well. So, following the Pahalgam attack, there are growing concerns about terrorist financing, which could, lead to stricter global regulations on cryptocurrencies. These digital assets are often under scrutiny for their potential illicit use. While the Trump administration has been pretty pro-crypto, with efforts like a crypto task force and even a so-called crypto czar, it's important to note that global regulatory responses might not all go in the same direction. When it comes to the actual impact on crypto, we could see much stricter anti-money laundering and know-your-customer rules. After the attack, India and other countries might tighten these regulations for crypto exchanges. This would likely increase compliance costs for major platforms such as Binance and Coinbase, and that could reduce retail participation. India's Buy Ucoin CEO has pointed out that regulatory clarity is really key for growth in 2025. On a global scale, we're seeing some fragmentation in regulation. For example, the US is easing up a bit, like the SEC dropping cases against Ripple, while countries like China are still clamping down hard, which is pushing a lot of crypto activity offshore. If India, a major market, decides to crack down, especially after the attack's connection to cross-border terrorism, it could really hurt adoption. Investor sentiment is also taking a hit. Even though Trump is pro-crypto, the uncertainty around actual policies, like the lack of a concrete Bitcoin strategic reserve, has made investors pretty nervous. There have been posts on X pointing out just how sensitive the market is to regulatory news, with a $106 million Ethereum whale liquidation tied to broader market panic. Looking at the likelihood and details, the attack's attribution to TRF and alleged Pakistani backing could spark international calls to monitor crypto transactions, something we've seen after similar terror incidents in the past. In 2025, consumer protection is already a big focus, with scams and fraud driving increased oversight. The crypto crash in February 2025 was partly blamed on this regulatory uncertainty, with no clear progress on proposed policies. If India implements restrictive measures, it could end up looking a lot like China's crackdowns in 2024, leading to reduced market liquidity. Now, let's talk about security breaches and market scandals. The crypto market has really taken some hits lately, like when Argentina's dollar Libra cryptocurrency collapsed in 2024, causing major losses. The Pahalgam attack could also, in a roundabout way, fuel fears of cyber-enabled terrorism, which means crypto platforms might face even more scrutiny over their security. One big risk is exchange hacks. High-profile security breaches, like those we've seen in previous cycles, can seriously erode trust. In 2025, it turns out that 40% of crypto owners don't feel confident in platform security, and about 20% have had trouble accessing their funds. If there's a major hack, it could trigger panic selling, just like the $2.3 billion liquidation event in February 2025. DeFi, or decentralized finance, is another area of vulnerability. The fallout from the attack could put the spotlight on DeFi's role in illicit finance, leading to more targeted regulations. There was a $106 million Ethereum liquidation on Sky in April 2025 that really showed how fragile DeFi can be during market crashes. Right now, DeFi's total value locked is at an all-time high, which honestly makes it a prime target. Market sentiment is still reeling from scandals like the Libra collapse, which has made retail investors pretty risk-averse and reduced demand for altcoins, many of which are still structurally weak after the crash. Posts on X are warning about DeFi repercussions from large unstaking events like a possible Bitcoin sell-off. Given the high-profile nature of the attack, governments might start auditing crypto platforms for terrorist financing, which could expose even more vulnerabilities. Past exchange failures, think FTX in 2022, showed just how quickly trust can evaporate. Smaller exchanges or DeFi protocols with weak security are especially at risk, and this could cause a domino effect on market prices. Moving on, environmental and sustainability concerns are also coming to the forefront. The Pahalgam attack happened in an ecologically sensitive area, which could, really draw attention to environmental issues, including the energy consumption of cryptocurrencies. Bitcoin mining, for example, uses a ton of energy and is projected to hit 70% renewable by 2030, but it's still a major point of criticism. There's a potential for a regulatory push toward green crypto. After the attack, environmental narratives could become even more important, especially in India, where sustainability is a growing concern. Regulations that require renewable energy for mining could drive up costs and impact profitability for miners. We're also seeing an investor backlash. ESG, environmental, social, and governance considerations are playing a bigger role, and in 2025 there's been a shift towards sustainable projects like regenerative finance or ReFi. If there's a backlash against energy-intensive coins like Bitcoin, it could push prices down. Public perception is shifting too. The ecological context of the attack could amplify criticism of crypto's carbon footprint, making retail investors less likely to get involved. For example, in 2024, Tesla stopped accepting Bitcoin payments over environmental concerns, which led to a 5% price drop. In terms of likelihood, while ReFi projects are gaining traction, mainstream coins like Bitcoin are still under heavy scrutiny. A regulatory focus on carbon-negative mechanisms in 2025 could hit mining-heavy networks the hardest. India's push for green technology, combined with the post-attack environmental focus, might even lead to localized mining restrictions, which could affect global hash rate distribution. So, let's talk about macroeconomic pressures and monetary policy shifts. The Pahalgam attack's global attention could really, make existing macroeconomic concerns worse, like inflation and monetary policy tightening, which are already impacting crypto in 2025. When it comes to inflation and interest rates, persistent inflation and fewer Federal Reserve rate cuts in 2025 are making treasuries more attractive than crypto. Remember, a February 2025 crash was actually driven by inflation fears and US tariffs. Then there's the carry trade unwinding. The Bank of Japan's 2024 rate hikes led to a $1 billion crypto liquidation by unwinding yen-based carry trades. Similar policies in 2025 could trigger more sell-offs, especially if global banks tighten in response to economic instability after the attack. And recession fears are real. Geopolitical tensions from the attack, combined with tariff-driven economic slowdown, could really fuel US recession concerns and reduce speculative capital for crypto. The timing of the attack, alongside tariff-driven market stress, just increases the likelihood of cautious investor behavior. X-Post suggests that markets expect central bank intervention, but if there are delays, downturns could last longer. Altcoins, which are already lagging behind Bitcoin's 80% dominance in 2025, are particularly vulnerable to macro-driven sell-offs. Now, the connection to the Pahalgam attack. This event actually amplifies these risks by, first, heightening geopolitical risk. It really underscores terrorism's global impact, which could lead to stricter financial regulations and a reduced appetite for risk. Second, it disrupts regional markets. India's crypto growth could stall if tourism and economic confidence take a hit, especially with the Amarnath Yatra at risk. And third, it could trigger global repercussions. The attack's diplomatic fallout, like India-Pakistan tensions and US involvement through Vance's visit, could line up with tariff-driven volatility, basically creating a perfect storm for crypto markets. So, what can investors do? Here are some mitigation strategies. First, diversify your portfolios. Balance crypto with traditional assets to hedge against volatility. Next, focus on fundamentals. Invest in projects with strong utility, like Ethereum or Solana or real-world asset tokens, since those tend to show more resilience. Also, monitor the news. Stay updated on geopolitical and regulatory developments because crypto is super sensitive to news. And finally, use risk management. Employ stop-loss orders and avoid over-leveraged positions, especially considering that $2.2 billion liquidation precedent. In conclusion, the cryptocurrency market in 2025 faces multiple headwinds, and these are amplified by the Pahalgam attack's geopolitical and economic ripples. Key risks include escalating South Asian tensions, US tariff impacts, regulatory clampdowns, security breaches, environmental scrutiny, and macroeconomic pressures. While the market is projected to grow to $39.75 billion by 2029, short-term volatility is likely, with Bitcoin potentially dropping 30% and altcoins up to 60% in a mid-cycle correction. Investors should approach 2025 with cautious optimism, focusing on long-term trends like institutional adoption and DeFi innovation, while also bracing for event-driven downturns. And hey, if you'd like a deeper dive into any specific event or coin, or want this analysis in Bengali, just let me know.